Hello friends, my name is Rilesh Raut and today we are going to speak about auditing. I would be covering the basic concepts and later on we can further look into more classifications and more advanced study of the auditing concepts. The book I am going to refer is this. This is as you can see, Institute of Cost Accountants of India. This is a intermediate course book and the paper code is paper 12. So from referring this book, I am going to make this video. So most of the CMS students can benefit from it, and as well as other students also. It depends. The contents are mainly same in all the curriculums like CA, CS, or you can say look at for TY BCom also. There are little differences, not major ones. So let's first try to understand what exactly is an auditing. Lot of people have fear about that auditing is a difficult subject, but actually it's quite simple. The only thing you have to get a auditing common sense in you. When you go through lot of questions, concepts, a lot of questions, you would be able to understand that there is a simple logic being followed in auditing, and that logic is applied for n number of audits, no matter which category it is, no matter for which organization it is. The basic things are followed for it. The first thing you all want to understand is that what exactly is the word auditing. So auditing, in short, we can say it's a independent examination of financial records. Now I would explain this sentence. Independent. Why it is called an independent? There are two things. That the first thing is the person who the auditor, his interest should not be in the company. Like he should not try to get something from the company by doing the manipulation in accounts. The second thing is he should not be influenced by the management or the other people like creditors of the company. So there's two things due to which it is called as independent. The second thing is examination. Auditor doesn't make transactions and all. These are the things done by the accountant. The only thing auditor does is he verifies that how the transaction are being conducted. Are they following the accounting principles? Are the accuracy of the numbers right? Or if the proper creditor has been debited or credited, what all the things, all the cash in the company matches with the cash on record. All this, the basic things he checks out. He basically examines how the things are working. So that's why it's called as independent examination of financial records. Financial records, because the core of the auditing is to check the financial accuracy of the company, whether it's a profit making organization or not profit making organization. It doesn't matter. Now let's look at some of the contents of this book. The first thing I would like to say that it was initiated in the period 3600 to 3200 BC. So long back the concept have been started. So basically it doesn't start from the new generation, but from long time it has been followed. Now we would look to the definition. The term audit has been derived from the Latin word audere, which means to listen. As I have said earlier also, auditor does not make transactions. He basically does is observe and check whether the things are working as per the accounting rules or not, or the company corporate law. Now we would look at the essential features of auditing. The first one is it involves evaluation of relevance, reliability, adequacy of the evidence in support of the verifiable information. This means that to check if a transaction has been occurred, like asset has been purchased. So for that, all the supporting documents we need to carefully examine to verify the relevance of the transactions. Second point is, it is analytical, critical and investigative. So the analysis should be done on it, whether the things are proper or not, it is followed or not. They have to investigate also. If the auditor is suspicious about some things of the organization, then he can further go in depth of that transaction to check whether there has been misappropriation of funds or not. Third is, the information audited may be financial or non-financial. So the transaction need not only be financial transaction. There are some of the non which can be checked by the auditor. The fourth point is, there should be standards or criteria for the evaluation of information. This thing has been said because there should be accounting standard, company laws. So these things have to be followed. Fifth is, the auditor should be competent and independent. As I have said earlier, the auditor should always be independent of his thoughts and of the management of the company. Now let's look at the sixth point. It ensures reliability of information and authenticity made in the financial statements relating to enterprise. So what we understand by this is that when an auditor audits the financial records, actually what he does, first the transaction were conducted by the accountant, he applied his mind and made the transaction. Second, the auditor does check whether the transaction have been proper or not. Is there any misappropriation, any frauds, any errors? The error can be of two types. It can be intentional error and it can be unintentional error. We can't always say that the accountant has made a fraud to his personal interest. Sometimes due to lack of knowledge or lack of practices, or due to lack of accuracy, some mistakes are occurred. So according to the conditions present over there, the auditor questions the accountant various questions on the basis of it he evaluates, and later on he gives out the auditing report. That's the main part of the auditing thing. Now, as we have understood what auditing exactly means, now let's look further into the concepts in it. Actually, as we can see, there is quite a difference between auditing and investigation. Auditing is basically general examination of records, but in investigation we are not specified to we are only specified to certain parts of the transaction to check whether the fraud has been conducted or not. Generally, investigation depends upon the situations. Now, the objectives of auditing. There are two objectives basically, and these are the universal objectives. You can say it anywhere. The first one is the primary objective. The primary objectives of the auditing is that a true or fair view. The second is the secondary objective. As that in the secondary objective, it is to check whether there is misappropriation of funds or cash allocation or teaming and lading. So these are the two objectives. Now, the significance of the importance of auditing can be of a legal point of view, that it helps for filing of income tax returns, to take action against bankruptcy. From internal control point of view, internal control we will discuss later on. So just in a general sense, take it as to quick discovery of errors and frauds. And the second thing is uniformity in accounts. The account should be uniform. All the transactions should be treated the way it should have been, according to accounting principles. For external affairs point of view, settlement of accounts, valuation of goodwill and all. So basically what happens that sometimes companies get valued, and for that they should analyze the audited records. On the basis of that they value the organization for merger and acquisitions. There are a lot of concepts in this. As I would discuss in short, I wouldn't go in depth. I would just touch the core of the topic, and I would furthermore. The concept from materiality. This concept is really helpful. Materiality means that sometimes we have to look for only those transactions which are relevant or not. Sometimes what happens if a company's turnover is 100 crore. In that 100 crore, if there is a misallocation of 100 rupees, it doesn't matter. It is not material. But if the same company makes error of 1 crore, it is material for the organization. Every organization can't go in depth to each and every errors and frauds, because it's in practical it's not at all possible. So that's why the concept of materiality is really important. Materiality means relevance of the accounting transaction. Now this basic concepts you should really go through. You should go through a lot of basic concepts of such kinds. So your core will be really powerful. And the second is true and fair view. True and fair view basically means that the transaction should be true, means that it should be accurate. The transaction should be debited or credited to the relevant head of accounts, and there shouldn't be any errors and fraud. So that's why it's called as true and fair way, and it's the primary objective of auditing. Thank you guys for listening. I hope you are able to understand. If you have